Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday. We're at the 13th of April, 2023, and we're just after the 5 o'clock time frame for you. All right, so where are we in all these markets? Well, first I want to thank many of you that did attend the webinar. We had a good time. I was flooded with so many questions, I couldn't answer them all. That's unusual. Normally I can get right to them. There was just that many. I would have needed another hour. I looked at how many I had to go. Normally I'll say, let's give it another 5 minutes and do it. No way. Would have been another hour. So you have a lot of good things. Now tomorrow, for those of you that watch financial markets, keep your eye on bank earnings. We're going to get the big boys coming out. You got Citigroup, JP Morgan's coming, PNC, and Wells Fargo. They're coming at you. For investment, keep your eye on BlackRock. And then, of course, we're going to get retail sales tomorrow. And is the consumer pulling back or not is going to be the big question here. We saw today in the afternoon the lending at the Fed windows, and it's fallen a bit, and that's a very good sign. At least the banks aren't stressed all the way, but they also haven't repaid all that money they took. They're not taking more, they're taking less, but they haven't begun really plowing the money back in a big way. The Fed balance sheet fell by about, $17 billion in the latest reporting period. And remember, as that happens, that means the Fed's not in the market buying bonds or whatever they were buying, whatever instruments, and we'll see what that does. Now, a lot of people think, and I've said this to you over and over, that the naysayers, as I like to call them, the Fed is never not going to be able to cut rates. They're going to pivot this year, that maybe they can go in May, 25 basis points. This is their argument. And they'll never go again after that. That's it for this tightening, and the market will take care of the rest. Okay, I get their argument. Now the question is, does their argument hold up? Does the economy weaken? Does inflation fall? If inflation stays sticky, I think that everybody has to understand the Fed mandate. They have one purpose: full employment and control inflation. 5.6% core inflation is not 2%. How do you get it down? If you're telling me it's just going to fall because it's going to fall, fine. But if you looked at shelter cost, and today I was telling people, if you looked at, there was an article about New York rent, new all-time high in Manhattan. Very expensive. It's not Kansas. It's not Chicago. I get it. All-time high. So somebody's paying it. Somebody wants to be there. We keep hearing how the office buildings can't survive. And with that, the commercial credit. So on the commercial credit, interesting, another article I was reading. And that article talks about, yes, the banks are going to say no, but there'll be another group of prepared lenders, private. They're going to charge more than the bank, but they'll be able to keep those properties going, or they'll make them merge with other properties, or those properties will get sold, which they should be, at distressed levels, taking out equity of current investors, whatever that means. Then they come in at a lower price and the buildings can be repurposed. Interesting article. And I think on the money. So do I think it's all of that? No. But I think you've opened the door to what some of it's got to be, with the $1 trillion plus in debt coming up on B and C commercial real estate. That's a problem. Okay. So when I look at the gold market, nonstop, it's difficult to get in it. Where do you get in and put a stop other than just, I'm getting in and where's my stop? I don't know where to put it, but I'll have one. You go broke doing those things. This is a move that has just taken on a life of its own because the market believes that with lower interest rates coming, the market believes this, that the dollar then will fall, that Europe's got to go up higher on rates. Remember, this high energy price gives them a complete different look than we do. We still produce most of our own oil. Not the case in Europe, as you know. They just got off Russian oil. They're importing oil at these high prices. What do you have to do? You have to curtail demand. They're going to keep raising interest rates to do that. So be it the Swiss franc, be it the euro currency, those are the currencies that probably get the big benefit off of the rising rates in order to do that. Money moves to the highest rate. So the dollar falling is helping the gold market go up. Higher lows, higher highs. You're well over the 18-day average. The first break to that probably finds willing buyers that haven't been in going, that's my opportunity. That's my opportunity. That's what I'm expecting. And you're at a resistance point, the upper Bollinger Band. I will say what I always say here. I want somebody other than me to own that upper Bollinger Band. It's one thing when you have a narrow set of bands and you get first time over it. And I point that out to you over and over. I'll go, look at how narrow the bands are, and then the market can make a move. Not the case when you got wider bands, all right? Normally, it's setting up a trap. The word is normal. Can it get away from it? It could. Okay, but you won't get my style of me telling my clients, buy it over a Bollinger Band, you're going to be fine. You're generally not going to be fine. You're also not embedded. So if you embedded, at least I know that, hey, on minor breaks, I'm looking to be a buyer. Haven't done that yet. The market that's ripping gold up, and eventually there'll be a correction on this because you've come from 92 down to 79. You can get a 5-6 point bounce here like that, but silver's stronger than it. And the silver market's got the benefit of Chinese demand, solar panel demand, demand for all kinds of electrical things. And that's what's driving it with the embedded reading. This market on even 20-cent breaks, probably going to get good support in it as they come. The copper is now straightened the chart out. I don't have all the lines on it that I used to have. So it's given me something else, all right, even on the daily charts. But it has not said, I'm ready to go. If China's ready to go and if China's real, good. Now, what happened today? We wake up and in my full research report I showed the Chinese demand that came out last night. That's what drove copper up today. If you take a look at the copper reading for the day, the copper market was up today, and this is off the Chinese demand, 1%, 400 points. So that's where you're at. But it's going to have trouble, in my opinion, at the upper Bollinger Band. You haven't hit it in a while. It's a natural first resistance point. The market that is stronger is platinum, up and away, but overbought. Again, over the band. 5% of the time will you stay over or under the black band. So you get there and you'll always say, you will. It's just your nature, okay? You're going to say, this is the time it's just going to keep running. And then a week later you go, oh, why did I do this to myself? What the heck did I do? That's inevitably what happens. You get a better opportunity. It doesn't mean the trend has to end. That's not what it's about. It's about generally there's a better opportunity on the other side of that band. I don't care if prices are higher at that point. I need safety. I need a place where I'm wrong, that I can handle. If I can't find those two elements, I don't want to be involved. That's how traders break their accounts. I have so many accounts that trade through us, and they don't know the word stop. They don't know where they're wrong. They don't have a concept, okay, if I lose momentum, that's where I'm wrong. It's just, I'm going to be fine. I'll put in more money. I'll put in more money. Okay. When you look at the palladium market, you're over the upper Bollinger Band and you're overbought. Again, somebody else can own that. I wouldn't have my client do it. And as bearish as I am on the dollar, and you know I am if you viewed my special report a week and a half, 2 weeks ago, no, I don't want you getting short under a Bollinger Band. There's better ways to do it. That's all I'm saying. You can do what you want. I'll find a better way for my subscribers. And that's what I try to do. I want you people to all join me. You know, already I ask you, and I hope you do it right now, give us the thumbs up here. It costs you nothing to do that as you're watching us. But in the morning, I start at about 5:15 in the morning recording. That's a.m. Central Time. I'm through 15, 20 minutes later, and the video will be in your hand no time. I want you to join me in it because you're getting a leg up. You know what? I'm going to talk about what Asian markets did, Europe has done, what's on the agenda today, what are the key reports coming out. Then we go into the action. Why? Because futures, most of them, not all of them, most of them trade about 23 hours a day. In the stock market, the reality is the market finishes up, as you know, at 4 o'clock Central Time, or 3 o'clock, as you know, and over. 3 o'clock Central, 4 o'clock Eastern. Game's done until the next morning. Yes, there's an aftermarket, but it's lightly traded. It's not at all like that. Market needs that first half hour. So I'm covering the ETFs for you. I'm covering the futures. There's going to be 40 charts in each. We're going to strip the charts apart. We're going to look at them together and take it that way. You can even view what I do on a free app that we give you for your Android or your iPhone, either way. So it's about strategy thinking, ideas, and from there, you take them and you do what you want with them. Inexpensive? Absolutely. You know why we show the cup of coffee here? You're going to spend more on that coffee in 1 week as you're going to your Starbucks by a lot than my service is going to run you for 22 business days a month. You're going to get roughly on the combination of this videos, 48 videos. Weekends, we're going to cover the weekly charts. Take a shot. You don't like it, you quit after 1 month. That's up to you. How do you go about doing it? It's simple. You go to our website at iraepstein.com. Another thing you can do, you can move your cursor right up to the top here at any point. And what will happen when you do that, an icon will appear. Click on it. It'll take you right into our research area. Read about it. Away you go. You're not signing over the house, but just think, I may come up with an idea or two you might like. I'm Ira Epstein. You have a good evening. Talk to you tomorrow.